Welcome back to another episode. Today, unfortunately, we're going to take a quick look at Paysafe after the company reported earnings, and its stock price is down over 42%. It's funny, right? Earlier today, I did a video on another fintech company that's up double digits. Today, I'm taking a look at a tier 2 in my portfolio that's down strong right now. So I just want to share my overall thoughts and see what happened during earnings. So let's just get right into it, right? Paysafe right now, what happened? They missed big on revenue expectations, and they also lowered future guidance. And the main reason they saw these hits or this decline in both revenue and their guidance is one, the digital wallet segment took a huge hit, and we're gonna see a quick look at the power slide, both in current expectations and future expectations. Another thing is they did see an exit of certain clients within the integrated processing segment. This is one of their revenue segments. They saw a few clients leave there, which kind of affected business as well. Finally, they also saw gambling regulations and softness in Europe. So these are the three major reasons for both the guidance and the miss in expectation. So let's take a quick look at the slide, right? Imagine this being the number 5 slide you see when you're an investor. Obviously, this is going to create some form of negativity in the forms of stock. Here they can see the digital wallet, for example, the expectation. They were expecting Q3 to see a bit of a hit compared to Q2, but what they actually got was a lot bigger hit than expected. For the digital wallets, they expected a nice regroup or a nice upclimb back up in Q4. Unfortunately, based on current expectations, they don't see that happening anymore. Again, if you guys are not familiar, for example, two main countries in Europe have kind of made a little bit more stricter regulations in Germany, for example, in Germany and Netherlands, with the form of gambling. And iGaming is it's a revenue collector for this company. So for those kind of regulations happening, it kind of also affected future guidance. So now let's take a quick look at some other stuff. So revenue was $353.6 billion. This was down 1% year over year. They did kind of sell off a small portion. It was called Pay Later. If you exclude Pay Later, this revenue is actually up 2%. Their total payment volume was $31.1 billion. That's actually a nice amount of money, in my opinion, of payment volume. This was up 19% year over year, and it was down about 3.7% quarter over quarter. Here we can see the overall charts they show volume up, revenue unfortunately down. Adjusted EBITDA, if you exclude Pay Later, which is the company they divested out of, it's pretty much flat year over year. If not, it's down about 1%. This is a company that's profitable in adjusted EBITDA, and free cash flow is about 70 million, and that's up 19%. So there's definitely a lot of bad. There's definitely a lot of bad, but there's also some good, right? I don't think it's completely game over for the company, and I'm going to share my overall thoughts in a bit. But do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. I understand for a stock price drop, right? For me, one of the favorite things, or one of my important things of investing in Paysafe was the digital wallet growth. Now they're saying, hey, their digital wallet growth is taking a hit. Another thing was iGaming, right? iGaming, casino, online sports betting. They're doing super strong here in the United States, and we're going to look at that growth. But in Europe, they're seeing that decline. And this is unfortunately the problem with, or not the problem, the risk with investing in something like this. Regulation takes a huge impact, and regulations can change over time. But at the end of the day, I understand why there was a drop. I don't know if I truly understand or believe a 40% drop is what this company deserved. So now let's take a quick look at some highlights. Growth, this company is still focused in iGaming, in crypto, and e-cash. And they mention here right now, revenue, even though it's still a small portion in North America, iGaming's revenue grew 50% year to date. And that's pretty impressive. They're live in 19 states. I believe right now there's 21 states in the United States. A lot more states are coming out. For example, New York, is going to be one of the big players in the next few months. So that can help overall the growth in the North America iGaming. They're also seeing a strong growth of companies requesting strong interest from existing merchants in pipeline in iGaming and crypto, right? So the overall growth thesis is still there. I do believe there's a lot of hurdles this company is going to have to go through. Another thing that they mentioned is they closed the acquisition of Pago Efectivo and Via Fintech. Pago Efectivo is one that increases their e-cash solutions in Latin America. Via Fintech is one that exposes them into a little bit more Europe, into a little bit more European countries. They also have another acquisition in Latin America that they are going through and expect to close in the next few months. Now let's also take a quick look at their revenue segment. Remember, I said $353.6 million in revenue. Most of that is actually, it's broken down into three segments. The eCash solutions, this was up 10% year over year. That makes up about 90 million out of that 353 million, so a good portion. Digital wallet, this was unfortunately down 15% year over year, and this is the main reason they missed that revenue expectations. Digital wallet, and that makes up 837 out of that 353. Then they have integrated processing. This is the biggest portion of them. It was up 4% year over year. It's actually up a little bit more if you don't exclude, if you exclude certain things, but 4% year over year. And this is about 187 million out of that 353. So let's see. Let me see if I had actually any more PowerPoint presentations. Yeah, we can see, right? This company, for the overall fiscal year of 2021, they do believe their eCash and integrated processing will still grow if you exclude Pay Later. For example, for the full year of 2021, they expect their eCash solutions to grow about 18%. They expect their integrated processing to grow about 18%. And this is roughly 70% of total revenue for the company. Again, digital wallet, still a good portion, but majority is still driven by these two growth machines. At the same time, when I invest in Paysafe, I mentioned it numerous times, this is not a company that I believe is a true grower right now. But if the world continues to evolve into the iGaming, online casino, into just typical gaming as well, and cryptocurrencies, digital wallets, this could definitely be a good player. And that's why it is in my portfolio. So now things to note. Am I worried? I mentioned this a lot. One bad quarter doesn't make or break a company, but it does tell me, hey, Jose, right now I'm looking at Paysafe. Their growth, obviously, that what they believe is still going to be a huge grower, is still intact. Right now, it's not showing that, right? That digital wallet is showing that decrease, certain clients leaving out, competition, regulations. For me right now, based on my position size, this is one where I'm not going to sell. I'm not going to sell one bit, but it's not one I'm planning on adding anytime, adding a big position anytime soon. Maybe on my dollar cost average a little bit here, just bring my cost basis down. I felt like I was grabbing at a great point when I entered. My average is around the 7s, the low 8s. So my price point is definitely not as high as that 19 this company saw. I kind of bought it at the dip. Sometimes the dip is still too early. What I do want to mention though is position sizing is important. Like I mentioned, this is a tier 2 company in my portfolio. So tier 2 companies are roughly less than 3-4% of my portfolio. I don't think Paysafe made it that big. But because of my overall tier system, and if you guys want to know my tier system, it is on the newsletter. I share for free my weekly newsletter and share this presentation. For those reasons, it doesn't freak me out. A stock price doing 40%, obviously it sucks. But at the end of the day, portfolio doesn't take a huge hit. My tier 1 companies, those are the ones that make the moves, and those are the ones that really move my portfolio down or up. So for me right now, this is, if I didn't have a happy position right now, this would be the time where I would low dollar cost average until this company really starts to kind of turn around. Maybe we see some more growth in that digital wallet. But if I already had a big position, and with position sizing, it already met my position sizing. For me, it's more of a hold. So it all depends on where it would be in the portfolio. I do want to say, because of volatility, I wouldn't be surprised if in the next few days it kind of does some crazy rubber band effect. Volatility is still going to happen. At the end of the day, this one's just going to be on my back pocket right now. Going to keep an eye on it. Nothing to really freak me out, but it's telling me, hey, Jose, keep a closer eye on Paysafe for one more quarter, maybe 2 more quarters before you decide. And that's the plan of long-term investing. Sometimes you win some, sometimes you lose some. Position sizing is important. Take care, have a good night, and see you next time.